Hello and welcome to another edition of Radio Free Market World Report with me, your host, Andy Duncan. The situation in Europe is close to melting point. The senior politicians and bureaucrats of the EU in Brussels, Belgium, have been discussing how they can fleece their citizens over the next few decades to pay off all of their enormous government debts, raise to buy votes, pay off favours and subsidise the infamous European social model. Bank industry technocrats have taken over the governments of Greece, Italy and probably take over Portugal, Spain and Ireland. To discuss these complex matters, I'm joined this morning from Brussels in Belgium by Vincent De Roeck. Vincent is the former Director of Programmes of the Alliance of European Conservatives and Reformists and is currently the Managing Director of NACMA, a boutique consultancy he founded this year. Good morning, Vincent.
Good morning, Andy. Thank you for having me. It's a pleasure to be on your show.
Even though I live in England, close to Europe, but unfortunately still within the EU, although for how long, who knows, I'm completely baffled by what's been going on in Brussels in the last 2 or 3 days. Can you describe the current situation and what do you think is going to happen to the euro fiat currency next?
Basically, it's all very baffling for, many other people as well, both in Europe and outside Europe. In order to understand basically what's happening now in Europe, you need to go back a bit in history and go back to the late 80s and the early 90s when the European elites and bureaucrats basically decided that the way ahead for the EU was to transform the common market as it was intended into a full political union, including a common European currency, which was called the ECU and later on the euro. Of course, as I'm sure you know and many of your listeners might know, the economic rationale behind the euro never existed. It was a vanity project right from the start, meant to be some kind of trigger to show to the world that the EU was more or less a state in its own right. So what's going to happen next? We had a big European summit yesterday and the day before in Brussels, whereby the leaders of the EU, except for the British Prime Minister who refused to sign the compromise, was to set up a full fiscal union at the European level. So basically, they're pushing forward now a major treaty change or even a new treaty, depending on how they can solve this legally, to give the EU level all competences in matters of fiscal policy, linked to that also taxation policy and the management of the debt levels of member states. So what will happen now from here? Basically, perhaps for the short run, the problems can be tackled this way. From the long run, I'm pretty sure the system remains flawed and dangerously unstable.
So how long do you think that this current compromise is going to last before it also needs to be fixed again?
By the springtime, they might need to resort to a different kind of solution or even try to, make the rules more stringent and more severe, because I don't see any real way now how basically, putting all your power and your decision power into the hands of Brussels bureaucrats might suddenly calm the markets down. Although we have seen in Greece and Italy, two other countries that have been taken over by, let's say, EU-style bureaucrats to say the least, that the markets at first have responded fairly well. But I remain pretty skeptic when it comes to the long run.
You say the bureaucrats in Brussels, but are they really a fig leaf in disguise for bureaucrats in Berlin? I was recently for my sins in Frankfurt in Germany and I was absolutely stunned to find a 30-foot plastic blue statue of the euro fiat currency symbol in the Willy Brandt Plaza. Much of the reasoning put forward in Britain in the 1970s to get us into what you told us earlier was the common market was the idea that Germany's enormous power would be muzzled by such an arrangement. I grew up reading war books, and in the war books there was always Tommy Atkins with a machine gun always shooting Germans, and there were always Germans shooting Tommy Atkins. So the mood in Britain at the time, even in the 70s, was still very kind of based on the Second World War. And yet now, like moths to a flame, the European dream has led to a point where German power will soon dictate to everyone else in Europe how they're going to lead their lives via Merkel and the Merkel-Sarkozy axis without a single Wehrmacht bullet needing to be fired. Do you think we're seeing seeing a Fourth Reich emerging. Is this just one unplanned socialist mistake after another with fix after fix after fix? Or have the banking technocrats who you just described got other more sinister plans for us?
Of course, Andy, what you're saying is indeed correct. I mean, this is a fix after fix and basically a mistake after mistake. But I do not believe that this is that what we're witnessing here is the emergence of a Fourth Reich, because we cannot forget that Germany here is not really the bad guy. The villain is France, and the villain has always been France. The EU was set up to kind of trick Germany into accepting a framework whereby decisions about German policy would be taken elsewhere. And now in the last decade, because of, the German position is, within the EU, it is the driving economic force behind the EU. It is the strongest economy in Europe, at least when it comes to total output and to total GDP. And this country has always been forced into some kind of inferior position vis-à-vis France, who, of course, as you all know, is a country with very big problems. So I do not see, in the latest evolution in Germany, whereby Angela Merkel, the Chancellor, is becoming a bit more aggressive towards other European countries, that this is not the start of a Fourth Reich or a new era of German imperialism or dominance, but just a counter-reaction which is triggered by the fact that in her home country, in Germany, Merkel's governing coalition has suffered severe setbacks and losses in recent elections, because the German electorate, the German people, they are tired of having to pick up the tab and pick up the bill and pay the bills that are actually left behind by other European countries. And now in the last couple of weeks, at least we see that the German politicians who regularly come to Brussels are at least reflecting the wish and the desires of the German people instead of just their own.
I think it was Francois Mitterrand who made the Germans give up the Deutschmark in order to bring the two Germanys together of East and West Germany. Do you think that the Germans might even go so far as to pull out of the euro before anyone else leaves to reform the Deutschmark?
That's the big question that everyone is asking himself here in Brussels, and I'm sure also in Berlin and in Frankfurt and in Paris. It would make sense for Germany, with or without some other strong currency countries such as the Netherlands, Finland, probably Austria, and maybe some Central European ones who are willing to have these very strict budgetary and monetary conditions and requirements in place. That would probably make sense from a German point of view. But of course the question remains, this is not about saving the euro. It is about saving the grand European project. And the euro is considered to be an integral part of that great European project. So the moment the euro fails, the bureaucrats and the EU leaders will perceive it as if the EU has failed. And that's an entire different story. I think it makes sense for Germany to leave. It makes sense for some other countries to join that Northern Euro or whatever name they would give it. But whether I see this happening in the short run or even in the long run is an entirely different thing. Of course, we all remember Germany under the Weimar Republic and hyperinflation. So I would guess that the only moment that the German political caste will finally decide to defend their own people and their own economy and no longer defend the economies and pay for it of other European countries will be the moment that there is double-digit inflation and then real inflation in the real economy, or even hyperinflation at some point hitting Germany. And only at that point do I see the German elites having enough courage to go to Brussels and to say, we want our Deutschmark back.
That will be someday. Now, in that list of countries you mentioned earlier, in what I might call the greater Deutschmark potential area, I would have expected you a year ago to mention another country, which is Belgium, in which you live. But you didn't. You didn't mention it. You mentioned the Netherlands and Finland and Austria. Now, one of the reasons for that is about the Dexia Bank in Belgium, which came under a lot of scrutiny recently. Even though I work in and around the City of London doing various things for various people, I had never heard of Dexia until I heard them in the news and then found out they're one of the biggest banks in the world. Can you tell us about what happened with Dexia and what this has meant for Belgium?
The reason why you didn't know Dexia before is probably because, you're not a Belgian and you're not on the city council in some city or town in the world, because Dexia is the world leader, or was the world leader, in the market of financial services to the public sector. So basically Dexia was active in all EU countries, most other European countries, and also in countries such as Turkey, Israel, Canada, and even in the US. Dexia Bank was basically created as the merger of the big, called the Communal Credit Bank of Belgium and the Local Credit of France. And later on, they took on banks in Italy like Crediop, or Israel like Otsar, Hashilton, Hamekomi, who were all leaders in their respective countries when it came to borrowing money and doing credit enhancement for local authorities. They also purchased FSA in the US, which is the Financial Security Assurance Bank, which is also the biggest credit enhancement company for municipalities in the US. So this bank was a huge bank, but of course it was struck in the 2008-2009 credit crunch and financial crisis because it had invested a lot of money in companies such as Lehman Brothers, and they also lost money in the Bernie Madoff scandal, and the bank had to be bailed out in 2008, which is when the board members were replaced by politicians. And it only took them a couple of years to get the bank back in trouble because the bank was investing huge amounts of money, billions, hundreds of billions of euros in government debt. And then when the debt crisis hit Europe, the bank had to be saved a second time. And the Belgian government this year decided that it would no longer go for a real proper bailout, but it would nationalize the bank, keep it in the government's hands and portfolio until it manages to sell off the profitable or less unsuccessful subsidiaries. And they have basically put all the troubled assets, which is basically a 95 billion euro bond portfolio, and they've put them in a bad bank. And you'll find Dexia Bank still on the Brussels Stock Exchange. But that Dexia Bank now